Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. I've got a new guest for the show today. It's Meridian Mining. They have a very exceptional project down in Brazil, and I'm really happy to have Gilbert Clark on the line today to talk about that. Thank you for joining us, Gilbert.
Thank you very much for inviting me onto your podcast, and I'm very happy to be here.
Well, what caught my attention when a good friend of ours brought the company to my attention is that you've got a project down there that has very low capex costs to bring it into production, excellent internal rate of return, really fast payback, and really, not a lot of companies can say that these days. Usually the IRRs are about a half of what you have, and usually the capex starts with $1 billion these days, so about 5 times your capex. Let's talk about the Meridian story.
I'd actually say it's typical capex and opex for operating in Brazil, because Brazil it's absolutely a wonderful destination. So we picked up Capital Project just after doing a corporate and balance sheet restructure in 2020. And what drew us to this project was basically we were presented with this entire VMS belt just sitting there. It had been defined by BP Minerals and Rio Tinto back in the 1980s and the 1990s. And then for corporate reasons, because for Rio Tinto it was just too small, they dropped it, and it just sat there untouched for nearly 30 years until we did the deal. And since that time, we've had, I think we're over some 60 million tons of inferred and indicated, plus a gram and a bit gold, open pit. The NPV 5 on this is 573 million with an IRR 58.4. We pay it back in 11 months, and we can do that because although it's a somewhat typical VMS deposit, I guess you can say after the VMS deposit was in place, there was a later event which imprinted over the VMS, over the copper, gold, and silver, a high-grade gold overprint. So we have high-grade gold, at surface, and then we go into the copper, gold, silver VMS system. It's a wonderful opportunity, and what we see is that we are going to be an emerging mid-tier copper gold producer in a very short time.
And not to mention, in the last 30 years, the change in the price of copper. I know that changed quite well because I started in the business about 30 years ago, and I remember the 1990s copper getting down to around 60 cents a pound. So it's changed quite a bit. 6 times that price makes a difference on a lot of copper projects.
We're quite a conservative group of guys and ladies within Meridian, and we actually generate those numbers using gold at 1650 and copper at 359. If we at the time when we released the PEA, if we put in the spot numbers into that financial model, which we brought in the Australian engineering group, who've got a big operation in Brazil, Asenco. It generated an NPV of over $1 billion. That's at the time, which was spot. So you can imagine where a lot of companies need quite high commodity prices to make their project work. This thing is so big and such simple and low cost. We actually survive in any type of I believe we survive in any type of mining cycle.
And I really believe that, when it comes to copper, with the troubles that the supply chain has, you look at inventories being very low right now, and that really doesn't seem to be able to change because you're mining copper on a lot of these old and ancient deposits, and then the stuff that is in the pipeline isn't enough. And then you've got all this demand coming from the electric vehicle revolution, alternative energy sources, and something that I don't think is well understood is just how much copper is going to be needed to rewire the aging infrastructure power grids of the developed countries. And then you've got the developing countries that need a lot of copper to modernize as well. So the supply and demand story is quite impressive for higher prices for copper. And, you know, with a project like this at current prices, it will only get better as the price of copper increases.
I can only agree with you. What I'd actually sort of bring to everyone's attention on Cabasal is, as copper prices go up, you're going to see mines that produce what we call dirty concentrates. They have impurities which are penalised by the smelter, be they for refractory or for their flue gas. We actually knew, because it was a small operating copper gold mine at Cabasal, we actually knew what the copper concentrate was like. And although it's almost 50-50 copper gold, we actually commercialize 80% of our revenue for a copper concentrate, which is going to go somewhere around 27% copper con, half an ounce gold, probably 3 ounces of silver. And these are the other thing. There's no impurities in this copper concentrate. It's remarkable. So if you're a trading house and you're buying a dirty or a low grade copper concentrate, you've got to blend it with something. And to be able to find high grade with high payable precious metal copper concentrates, they've got no impurities. I mean, they're as rare as hen's teeth. And this is what we know through both the work that we did with SGS in Canada, which was supervised by a guy called Mike Umpu, and the historical production seeds. I mean, we're very well set for that demand for copper. And if you were to blend this with a low-grade copper concentrate, you're still going to have high payable gold within it, because there's so much gold in the Cabasal copper gold concentrate. But what I will say is, this is just not one deposit. We have multiple exploration targets, and actually with the St. Helena mine, we've got which was a small copper, gold, silver, zinc VMS. We have actually additional resources or resource potential targets to go on. So very much how we see the Cabasal project is typical of a VMS belt, which goes for decades. They go for decades. They're very low cost. You can see that I think we're circa about 180 million in capex. All told, our OPEX mine gate is somewhere around, I think it's about $27 a ton. It's very simple processing. I think if you were to study metallurgy, your first course would be Metallurgy 101, and you could pretty much just put the Cabasal flow sheet on that and just say, here you go, that's Metallurgy 101. It's nothing simple as you will ever see. And I was chatting to our advisory guys who, you know, they were the old brains trust from Falconbridge, Mike and Phil. They basically said this is as easy as you're ever going to get in metallurgy. Crush, float, take off 20% of the gold through a cyclone. It's all done and dusted in 1 hour, which is remarkable.
You know, for our non-geologist audience out there, volcanogenic massive sulfides are also abbreviated to VMS. And what's important about that is the volcanogenic part of it. You know, these are volcanoes that create these deposits. And where you find one, you always find others. They come in clusters. One of the great clusters of the world is the Iberian Pyrite Belt between Spain and Portugal. And it looks like you've got the chance to find an entire cluster of VMS deposits on your project.
To find them, we actually know, I think I'm going to age in my company president might correct me, but I'm fairly certain we've got 7 identified VMS clusters to follow up on. So this is why I get about, we've probably inherited somewhere around about $100 million in today's money in historical exploration works and production works on this belt. So we're not sort of looking at where we're going to risk our money and go explore. We're going to say where we're going to go test or develop our resources along the Cabasal belt.
Wow. And another thing that I don't think a lot of people are aware of is just how prolific and exceptional the geology is in Brazil. It's a quite an amazing place for mining.
Yeah, well, it's really quite interesting because we've got when we looked at the to acquire a new project for Meridian, we actually have already been operating in Brazil for some time. So we actually had a criteria where we would explore or acquire projects. So our new president in Brazil, Lula, he said, I'm pro-mining, absolutely pro-mining, but I just don't want you going into the deepest, darkest Amazon jungle. And we are so far south of that. We're outside of it. We're down in southern, middle, I guess you could say, middle Mato Grosso. And the ground, really this traction for discovering new things, because although we've got the Cabasal belt, we've also pegged the two parallel VMS belts, the green belts next to us. So we're not just sort of a one-trick pony company. We've got a very large standalone economic project in Cabasal. We've proven that with the PEA. And we just have decades of exploration potential to realise today, but to continue for years to come. At the same time, we have regional projects 20 kilometres away to test. And these projects, these additional greenstone belts that we've picked up, they've also already had the first pass of exploration by BP and Rio Tinto in the 1980s. It's an amazing opportunity to really build the world's next mid-tier copper gold company.
And speaking of Brazil, Mato Grosso is one of the prolific regions of Brazil.
Yeah, it's been mainly for gold. We've got the big Vale iron ore mines, the copper mines they have, but this region kind of got forgotten. And yet it was one of the most prolific gold regions in Brazil. And then where it becomes quite surreal when we looked at this project, and we were just about to sign the option agreement to secure it, I rang up a colleague in Brazil and I told him we were about to acquire the Cabasal project, and he just said to me, he just said straight up, "This is by far the best undeveloped copper gold project in Brazil. Whatever you do, secure it, get it done." So we did this very detailed due diligence over 3 months, and we secured it finally in November 2020. And because we already had that management team, that in-country Brazilian management team we've been together now for a long time. We had drill rigs turning, camps set up, core sheds set up 4 months later.
Wow. And you bring up an important point that after the COVID crisis, it didn't really matter which country you were in. It became more and more important that you had key management people in country. Because it was difficult to move key people around. And so that aspect of having key people there is crucially important back in the COVID crisis, but I think it's a trend that is important for every project in every part of the world.
Look, 50 years ago, I was a senior investment advisor in a multi-billion-dollar natural resource fund, and one of my key concerns for Brazil was what we called execution risk. If you're going to give a company money, will they spend it wisely, and can they deploy it? And in Brazil, this is one of the unique things about Brazil. And the only place I could say is comparable is probably South Australia or Western Australia. But you can deploy your capital very quickly and get results and returns to your investors very quickly. And this is what really attracted me. So I had my team in Brazil, and we don't fly in, fly out. Our guys actually live 20 kilometers away from Cabasal in a town called San Jose Catamarcos. So we've got an entire, I think we've got 60 people, and most of our technicians we hired locally. So the fieldies and so forth, one of our geologists actually was born there. And some of the guys, the geologists and the technicians, their fathers actually worked on the mines when they were operating back in the 80s. So we have great social acceptance. It's pastoral land. We're very advanced in our environmental impact assessment, because when we looked at this project, when I looked at it with my agent and the team, we said, well, all of the macro risk is considered a brownfields restart. We have some 75,000 meters of drilling. We know where the deposit is. We know what the metallurgy is. We actually started our EIA in, I think it was December 2021. So we're actually we've gained nearly 2 years now. And that's being submitted for a 4.5 million tonne per annum preliminary license. So even though we're going to start in our financial model with 2.5, we're going to be hopefully be, once it comes through, pre-permitted to expand it up to 4.5 million tonnes, or whatever the optimization study comes out to say. So really, very much, because we've had so much certainty in the resource and the resource capacity, although I'll be honest, the gold overprint completely smashed me. It was, I think the first time we really hit it, we hit 26 meters at 21 grams gold from about 21 meters down or something.
Wow.
Yeah, it's amazing. It's an amazing deposit. It was just so easy to do, and even though we had the restrictions on COVID, we kept drilling. We had, I think we had a record of, I have to check, I think it was like 580 days without an LTI. So safety is very important for us, and our team is very close. So it's been a wonderful experience. And now we're actually starting to see, as you said before, the future demand for copper concentrates is actually becoming quite interesting. I've had two of the larger groups in the Western groups reach out to me in the last 2 months to discuss what's your projection for production. And I said, look, we think, subsequent to all financial studies and so forth, we should go in production sometime in 2026. This is one of our key targets. And they say that's separately, both of them said that period, 2026, we see it as a problem time for copper concentrates. And you can look at the commissioning of the big smelter in Indonesia for that. We just saw BHP saying they're not going to be increasing production out of their giant copper mine in Chile, which for the moment escapes me, Escondida. So it's a really interesting time. Like you said, the demand for copper is not going to go away. The demand for gold is never going to go away. And even in the cyclic nature of the commodities, our project is so robust with its economics that we can survive the ups and downs of the future to come.
When you were talking there, you described sort of the reasons that you can work towards fast production is because it looks like the permitting will go quickly, partially because you've already got a permitted mine there. And when we were doing our pre-interview, you had mentioned that there was some important mines that have recently been permitted. So it seems like the push towards mining is very strong in Brazil.
And you really just have to look at the activity that you're seeing in Brazil in the M&A activity. I think we can say that, like all the majors is there. We've seen consolidation by Kinross, Lundin Mining's bought recently, Vale's there, BHP, Eero Copper's doing fantastic. G Mining Ventures just brought a mine into production. It's just such a stable jurisdiction to deploy capital. And that's something that's so important. So when you look around the world, we've seen some ups and bumps coming on in some of the other South American companies. We've seen the legislative barriers being created in Europe and North America to sort of being able to build mines in a time frame that we used to do in the days gone by. I was reading an article on it was Kambalda, the nickel mines in Western Australia. And it was from, look, don't quote me the exact month, but I think from first drill hole to first concentrate, it was 18 months. Discovery drill hole, projection of export of concentrates was 18 months. I love to be able to do that in Brazil, but we will like I said, we will advance this project. We want to work very hard. After consultation with 2 separate engineering groups, once we've done the PEA upgrade, we're going to go straight to feasibility. We want to look to be able to go into sort of project finance preparation by the end of next year. It really is an exciting time, but that reflects, I think, what a strong investment destination for mining Brazil is. And on top of this, one of the things people have sort of always looked at with mining is, when you look at some of the countries that don't have diverse industrial bases, mining can be preyed upon by governments. Now, in Brazil, we have tourism, agriculture, mining, energy, financial services, manufacturing. It's got a multi-layered industrial base. So I think mining, even though Vale's top 3 mining company in the world, I think mining's only something like 9% of their GDP. So it's such it's an amazing country. And we've seen in the last, since I've been going there in 2018, actually starting before that, the improvements in security. Where we are in the countryside, it's like living in the countryside in any Western town. It's safe, secure. We have great infrastructure, cheap electricity, which is, I think that's one of the things that some of the Western countries have just woken up to, is you actually need cheap, sustainable, and stable electrical grids for manufacturing and mining. And Brazil is, I think, somewhere around 4.8 US cents a kilowatt private sector contracts. So it's a wonderful destination for that. And that's, I think it's 90% hydroelectricity.
So you brought up an interesting point there, that you guys are able to move right from a preliminary economic assessment, not do a preliminary fees, and right into feasibility study. And I got the sense from what you were explaining is that you've done so much work in the preliminary economic assessment level that you can jump right into a feasibility study.
It's also the fact that there was 4 years of production of underground mining production at the Cabaçal deposit. And so you sort of know, okay, if your ore deposit's known, your metallurgy is known. So we've already done the environmental testing of the mineralization for acid generation. We know we don't have acid generation from that because how the sulfides are hosted. It's a brownfields restart with existing electricity. So all of your salient risks associated with mining, which you address in your preliminary feasibility study, they've already been mitigated. We know what they are. We had a wealth, gigabyte. There's so much historical data that we took, and we replicated. We went, well, it's the same. And then when we did our resource statement, we had a guy called Simon Tair did the resource statement. Incredibly professional, highly conservative. We don't believe in smearing grade or anything like that. So we actually have such a robust resource statement, which aligns very nicely with the historical drilling and the works, that we will say, okay, look, it's a waste of time. There's no benefit. There's no diminuting the risk to our investors by doing something that's already been mitigated by historical works.
Perfect.
We took that externally. We took external counsel from 2 engineering groups to say, look, what do you guys think? And they said, no, just waste of time. Just do the feasibility.
So that the numbers in your IRR, your CapEx, and your quick payback all very much excite me, because I know that those, as you said, are rare as hen's teeth. But what also really excites me is the geology that you're talking about, because oftentimes VMSs can be zinc, lead, silver deposits, and the special ones are when you get into the copper and gold. And what you were explaining there earlier is about how the VMS portion of it is a copper gold VMS. But then you also mentioned the overprint of, it looks like the gold mineralization came in because of the path of least resistance, if you will, it created by the VMS. And now you've got this juicing up of the system with high grade gold, which is makes that for pretty exceptional geology when you explain it that way, Gilbert.
Well, the geo's out there. We've got 55 kilometers of strike along the VMS belt, and underlying that there's a tonalite. We think that's actually the source of the gold, and we can show you zones. Like Cabasal it's 2K long. We actually have some zones, some VMS. I actually don't know if they're one of them C2C, which is a gold silver discovery. It's just purely gold and silver. And then we go down to St. Helena. So we've got 7 hydrothermal centers. Cabasal is a copper, gold, silver, some zinc and lead, but there's no intergrowth, so they separate very nicely. And then we go to St. Helena, which is a very strong copper, gold, silver, and zinc. We have incredibly strong zinc there, and from the historical assays, we know that, I think quote me on this one, is that the copper concentrate there was going somewhere around 600 grams silver. So it's interesting how we see these multiple hydrothermal prospects. So we've got one massive resource. The Cabasal deposit's 2 kilometers long. It's 600 meters wide. It starts at surface and it's down to 180 meters. And you go down to St. Helena and that starts at surface. The gold overprint there has been mapped over 1.3 kilometers. It was never followed up on. And then underneath that, I think some 20 or 30 meters, you go straight into the massive sulfide pile. And that's a very typical copper, gold, silver, zinc, a little bit of lead, but it's not recoverable. And that's just the next resource development and exploration project that we're bringing online. So yeah, it's been a little bit surreal, because a lot of the junior companies sort of go, oh gosh, what are we going to look for? We're saying, okay, where are we developing next, and where's our next exploration upside? And because we do this low risk deployment of our equity, we manage our equities very closely. We did a capital raise back in April of this year, and we announced 8.2 million. And when we sort of told the market it was closed, we had nearly 300% increase in interest. And it wasn't just from sort of smallish funds. I'm talking about some of the most largest funds in the US, Canada, in Europe, that actually came into the capital raise. And we're really supportive and very happy we've got this. Not only do we have a very dynamic and retail base that have always supported us, and I think my retail shareholders, if they ring me up, well, they email me, they know I answer. But our institutional base, our backbone of our company, it's amazing. We have a share registry that'll be the envy of any mid-tier company on the TSX or the ASX.
Well, I don't blame them for having that interest. Something you were describing there, for the non-geos out there. So VMS is a volcano, and as you get to the vent, or the main part of the volcano, think of it like a volcano you see in Hawaii. And as you get close to the vent, there's what's called zonation of grade. So as you're farther away from the vent, kind of when you think of that volcano where the lava flows away, as you get further from the vent, usually you have a silver, zinc, and lead component. And as you get closer to the vent, you get into the copper and gold. So you describe some situations, some of those targets, as having that entire story. And then some are focused in on the copper gold zone. That's very exciting from a explorationist perspective.
On the Cabasal deposit, Allan, if you can imagine the VMS pile, you've got the massive tonnage feeder system. Well, here the feeder system has actually been brought up to the surface. So we're actually feeding, I think, look, the envelope at the moment at Cabasal, at just the envelope, is over 100 million tons. We use a 0.3 cutoff, it's about 60 million tons of indicated and inferred. But that actual mass is not the pile, that's the feeder system. We think the pile is underneath it. That's for Cabasal, whereas St. Helena, we're actually into the pile now, and we're going to try and find where the feeder system is. It's a remarkable belt because generally, if you're in a conventional VMS and that's in underground, with that bulk tonnage, that massive tonnage of very robust grades, it's not economical because you're 300 meters down. This is at surface. This is why it's not, it's just a mass of copper, gold, and silver mineralization with, like you said, with the perimeters lead, zinc rich. But then you've got that high grade sub-vertical gold veins overprinting it.
And when you talk about 100 million tons, just to put that into perspective, a lot of VMSs are 10 million tons. When you start getting over 100 million tons that's open, you start getting into some of the world-class VMS size deposits that you find anywhere in the world, whether that's in Canada or the Iberian Pyrite Belt. That's big.
Yeah, no, we under the USGS, United States Geological Services, the Cavasel deposit alone is actually classified as a giant just by its tonnage. The resource is actually a giant resource by their classification. It's 60 million tons of measured and indicated. And what we've been doing actually is infilling that resource and extending that resource. Because again, what we did is we didn't smear the grade. So some of the shallower zones that could be 50 meters of strike dipping up to the surface, we didn't put grade into that because we had no drill data. So we actually been drilling out the shallowest parts over the last couple of months. And what we recently did, which we found really exciting on the belt scale, is I'm just trying to make sure I get the right number for you guys. We drilled out what we think is the feeder system to Cavasel, because we've always seen the mass, but where does it come from? When we hit down the southwest, no, bigger pardon, the southeast deposit, we hit in a hole called CD240. We hit what we think is a feeder system, and that went some 34 meters at 4% copper, and actually had one zone going over 12.8 meters, 9.7% copper and 4 grams gold. And that's something that we want very much to explore and replicate along the belt. It was a very key moment I think there's been a couple of key moments for this company. When we first hit in respect to the belt, when we first hit that, I think it was drill hole 46, we hit that very high grade gold overprint. And then CD240, we hit the copper feeder system. I mean, I think I said 12 meters, was it? It was 12.8 meters of 4 grams gold and 9.7% copper.
Oh.
And that's at about, I think it was about 100. Actually, with what was really interesting in our pit optimization, 2/3 of that intersection was actually in the pit. The other was projecting down below the pit.
So, go ahead.
Well, that's going into some of those numbers are going to go into the resource. So what we hope to get out of the resource upgrade just at Cavasel is to make it more robust. The grade will go up, down, left, or right. Let's see because it's not us who determines the grade, but I think we can have much more certainty on the top deposit. We want to have a much less strip ratio on the deposit, and I think it's going to be a wonderful long-term mine. And we're replicating that low-risk approach to St. Helena, where we've got, again, I think some 10,000 meters of drilling, known geometry. We're now extending that, drilling that, confirming, trying to see what the extensions on it are. And
well, as you're talking there, Gilbert, I want to put into context a little bit more about these clusters of VMS deposits. When you have one, they often look a lot alike in a cluster. So what you're talking about there is big tonnage and very high grade and the potential to find a cluster. Those characteristics do not come along very often. I can really only point towards the Iberian Pyrite Belt to talk about those things: all size, grade, cluster. Those things are very rare, and you guys have it in spades.
Yeah, no, we were pretty keen to secure this asset back in 2020, knowing that we had essentially an open pit prospect ready to test and put on economics. And when we wrapped around the economics, we were just going, oh, this is looking good. But, we had to get the 43101 compliant data, independent people in to do the work. It was important that when we went through that phase of saying, look, we have something which is things standalone economics to develop the belt. Let's bring in really qualified guys to do this. And this is what's really interesting for us. We're developing the Cabasal mine. We have the Cabasal belt. We're now testing the St. Helena project, and we've got other projects, and we're a near-term producer. So where this becomes interesting, although we're going to test and probably prove up other deposits, the standalone economics that when we come to develop those potential other prospects, we're not going to have to do that through expensive equity. We should be in a net free cash flow situation then. So this is the real interest. This is what's typical of EMS deposits. So we're very positive about the project. We try not to do too much arm waving. We're consistently saying, this is what we're going to do. This is why we think we can do it. And we have been doing this consistently.
You know, your enthusiasm for this is quite apparent, Gilbert. And for the investors out there, one of the things I'm always trying to determine when I talk to management and evaluate a project is, are these guys trying to find a mine, or are they trying to mine the public? And when you're talking, Gilbert, you kind of emphasize a key thing that I look for. And that is when company management is so enthusiastic and all they want to talk about is their numbers and how things are looking and the geology. You know, these are things that I think investors should be looking at for. And it's quite apparent you've got that story in Meridian, Gilbert.
If you were to sort of break it down on the numbers and with Meridian and just let's look at the economics of Cabasal, I think we're trading at about 0.095, maybe 0.1 NAV of the asset. So typically these type of assets, I think we can comfortably say they trade somewhere around 0.35 to 0.4. So we know there's real growth just based on our robust economics. And then throw on top of that traditional way of valuing a prospect by the NAV, we've got absolutely de-risked prospects to test. So we've got what I think is a premium on top of that NAV. And it's a really interesting when I see certain companies that trade very well and they're great companies. Okay, and they've got growth, but are you going to see a company where you immediately got a standard economic upside of nearly 3 or 4-fold? And I think this is a reflection. We sort of brought out the PEA just in March of this year.
That's 3 or 4-fold just to get into a reasonable valuation.
Yes. Reasonable without taking out premium, which I associate to the exploration upside, which is we're now testing. So you've got your standard NAV, your exploration upside premium, which I think we should be attracting. And at the same time, we're just coming out of these the last 2 quarters been pretty terrible for the commodity space, for the base metals and the precious metals. So for us, when I speak to potential investors or existing investors, this is very much an opportune moment to invest in a company which is well financed, manages equity in a mannerism that's not typical for a small cap, on an asset that we think is going to drive the company to be a mid-tier copper gold producer.
Well, and if you look at the stock chart over the last year, this is about the best time to be taking a position. You're trading just off your 52-week low. And you're not the only one, Gilbert. And when I can find a lot of companies that are trading like that, it's often the time that you see a turnaround. And in order to have that turnaround, for a particular company, you need to have lots of catalysts. So do you mind talking about your catalysts? You mentioned a couple of times a bunch of drilling. You have results pending. And what's going on with the drilling and the work you're doing on your preliminary economic assessment and resources?
Yeah, look, we're just coming out of the summer vacation period, and we started drilling on the St. Helena deposit just I think in the end of July, might have even been the start of August. And now we should be, I think in the really short term, we'll be releasing the first results on that. And that's actually a very key catalyst for the company, because we have the standalone asset of the Cabasal deposit. And with the first results, if they are positive, and we should expect them that they're positive because we're drilling into a known deposit, what we're actually literally proving to the market, this is going to be a multiple open pit prospect development. And that's just going to be proved with the first assay. And that's a
It
very
won't
key.
be just Cabascal, it'll be also sent to Lena.
And that's, I think, some 8.5 kilometers away. And one of the things a lot of the junior companies, and for the investors to understand, a lot of the junior companies or small cap companies, they might have a small pie in a VMS belt. We've got the entire VMS belt. So these smaller, like Santa Lena could be 3, 4, 5 million tons. I don't know. Let's see where it grows to. If that was all that a company had, it's not economic. But because we've got the project in Cabasal with the standalone build economics demonstrated with the PEA, it's a satellite. It doesn't need the big heavy capex requirements to build a mill, because it'll be feeding into a mill that's already been paid off. And that's the spoke and hub prospect of the deposit. So this is a very key moment for the company coming up. And then we've got in Q4 this year, we hope to have the PEA and the resource upgrades brought into the market. In that, when we did our first PEA, we just did it on a flat 2.5 million ton per annum profile. And it was 23 years of production. So what we're going to do is looking at optimizing that study, start at 2.5, because that's, of course, in a standard project finance, it's less of an equity dilutive event, and then take it up to, say, 4.5 million tons through refinancing or through net free cash flow. So let's see what those economics are. At the same time, what we're doing is, because we started our EIA research and collection of data some nearly 2 years ago, we're actually applying for a 4.5 million ton, what we call the preliminary license in Brazil. So we will going down all these permitting, environmental assessment, and resource upgrades as per the agreement we did to purchase the Cabasal deposit. But in an M&A scenario, if you're a mid-tier company, you look at Meridian and say, look, I wouldn't start at 2.5 million tons. I would start at 4 or 3.8 or 4.5. Well, it's already been permitted for that initial. We could actually, if you choose to, could start initially at 4.5 million tons. But I always prefer to walk before you run. So this is the upside we're presenting. But our company, the economics is not about one deposit. The economics is about the Cabasal deposit and the valuation of the greater exploration portfolio that's associated and a long strike from the Cabasal, where we think the Cabasal mill will be located.
I often talk about the Lassonde curve, not just from an investor perspective, but also from a management's perspective. Understanding for investors or management where you are in that Lassonde curve is very important. And you have two aspects. One of the big runs on the Lassonde curve is on exploration success. Then you run into the development discount window, and then you move up when you bring something into production. So at Cabascal, you have a project that is moving towards the sweet spot of the second wave of the Lassonde curve, but then you've got all these other targets that put you in the sweet spot of the exploration wave.
Yeah, absolutely.
So
that's almost verbatim what's happened with the company's share price over the last 18 months. We hit that massive gold vein, proved up. That was actually that gold intercept we had, CD46. That was nearly a kilometer away from the old Cabasal mine. We've basically infilled that over a kilometer now, and that took our price up, went straight up. And then, as you expect, I guess some of the early entrants into the company, they exited out, the share price came out, and now we've come through to the PEA. We've shown the very strong copper results, and now we're actually going to that next phase. But we not only have the growth associated with Cabasal.
On your permitting.
Exactly. But we'll also have that what I could call the potential success. We've got to see what the assays come out from from St. Helena, which is another deposit. So it's a really interesting pivot point for the company. We're really well positioned. We've positioned the company for the board for growth. We've positioned the management team to take to the next stage. We don't have a lot of. It's really interesting. We don't actually have. We've got one expat that works on site, and that's the president of the company, Adrian. He's been working in Brazil since 2014. The rest of our team is 100% Brazilian. We don't have any expats fly in, fly out. Victor Bello, who's leading the in-country engineering works, he used to be the general manager of Paracatu, which is the biggest gold mine in Brazil. So we're not new chums to Brazil, and we can access the best people, the production, the mine builders in Brazil. And that's another thing that's been key for our investors to know that, okay, we have perhaps compared to other companies a high G&A, but most of that is actually at the project level. It's just high because of how we report it. It's a really interesting investment scenario to see the nascence, not only of what I think is a mid-tier company, it's nascence, but the beginning of a whole new copper, gold, silver production belt in Brazil.
Wow, and something else that I can give some inside baseball in. I'm relentless at looking for company stories, and I have a pretty good memory, and therefore I can put things into context. And Gilbert, I'm always looking for good copper and gold stories, good stories with low costs and good grades that make for high margins. And the opportunities out there to find I only know of one other company that I can say this story about being at the sweet spot of the bring something into production of the Lassonde curve, as well as the sweet spot of the exploration upside. That is a very rare combination to find these days, and that you're in rarefied air with Meridian.
Well, again, I think this is why we've attracted so many big long-only funds into the share registry. And I've been chatting to a number of fund managers across Europe, across North America, and in Australia now, and also to our retail shareholders. But for those larger funds, I'm saying if you haven't got 1 or 2 or 3% of Meridian in your portfolio at this stage, you're really starting to miss out what I see as a great growth prospect. And for my retail guys, my high net worth investors, this is where you come in at the start of what I hope to be is decades of dividends. We have to go through the permitting, the economic studies, but I see real potential when we're net free cash flow after on the current financial model. Say we start at January 1st, by November 5th, we're net free cash flow paid off the capex. It's an amazing prospect. But that again is because we've got this massive high grade gold at surface. It's just, yep. And this has always been the basis of the mining industry, is get these things into production as quick as possible. But in our case, it's get the belt into production as quick as possible, confirm the exploration, the dramatic exploration upside that we have, which we hope to do shortly with the results from St. Helena, and then longer term, all of those prospects we think will have the possibility of hosting economic accumulations of metals, develop those through net free cash flow, not through expensive equity raisings.
Wow, what a combination. And you described your success at speaking with institutional investors, and your background probably has something to do with that, because that's the side of the street you came from originally, right, Gilbert?
Yeah, no, well, originally actually came out of the eastern goldfields of Western Australia. I was actually a mine geologist, but I've been managing or part of a private equity fund since 2008. I left that in 2019. Oh, sorry, beg your pardon, 2020, to focus on Cabasal, or to focus on Meridian, because what I looked at the time is, again, what I've said in this interview. My hesitation to invest sometimes in South America has been the execution team. Okay, who are they? Are they just a group of expats come together over the previous 6 months? And to have a team existing that have known each other. I mean, engineers, geologists, environmentalists, accountants, environmental engineers, accountants, lawyers, country managers, and guys that have worked and mined some of the biggest deposits in Brazil. To have that in this small mid-cap company or small cap company, I just went, this is a no-brainer. You know, let's find a great asset. And it was when I chatted with this gentleman called John Waghorn, who's on our advisory board, and I said, look, we've secured Cabasal, or I'm about to sign. Actually, it was Adrian who signed for it. Adrian's about to sign for it. And he said, whatever you just keep it. This is literally the best undeveloped copper gold belt in Brazil. Do it. And we'd never look back. A lot of
Sounds
companies.
like he based that on his knowledge of the project, but since you guys have had you added a pretty exciting element, which is finding this high grade overprint of gold.
Well, no, we didn't actually find it because it was an Australian geologist called Rocky. What's Rocky's last name? Rocky Osborne, who found it. He was the senior underground mine geologist at the Cabasal gold mine, and he'd worked with Adrian, who's the president of the company. So within the advisory board, I've got the geologist who actually mapped it for the first time underground, and also we've got a Gilson Tierra, who actually was the chief geologist of the Cabasal deposit when it closed in 1991. So I got all this cold face information guy saying, just drill here. And where it becomes even more surreal is when I was brought into this company in 2018 to do the restructure, two of the advisors, one's called John Waghorn, the other one's Alfonso. I can never correctly pronounce his name, so I'm not going to get it wrong. Alfonso actually found the first sulfides in Cabasal in the 1977 for Vale. So this historical connection, not only of the discovery of the belt, and Johnny worked for Rio Tinto, so he knew about it, but to have the guys who worked underground, who actually logged the drill core, the guys who closed the geological database, it's risk mitigation. And when I first started to talk to investors and shareholders about the potential of Cabasal, I only spoke about risk, and people are just going, well, you know, what's risk? I said, well, I'm not going to take risk, and I'm not going to take risk with your investment because I know I'm going to be drilling next to a hole that's already been drilled. So, and we're just confirming it. And then by having the guys who'd actually worked underground just say, okay, drill there at an angled hole, because when it was first discovered, this deposit, they thought it was flat lying. So they drilled everything vertically. And it was only, and that was from 83 to 86 was the first big drill program. And it was the end of mid 87, early 88 that Rocky went underground and said, hang on, we've got this vertical gold overprint, and you can actually drive a bus through their drilling that's vertical and miss it. So we came in with angled drilling and went, holy smokes, fantastic. We've also got another geo. He's no longer a young man, but he was actually the field geologist on the project when it was operating in the 80s. He's now one of our senior geologists on site. So it's amazing that so much stored knowledge we've been able to access to de-risk how we deploy our investors' capital. And now the result is
and
exciting.
That cannot be overstated, because from a lot of exploration geologists, their career is spent looking at drill core. But when you can go underground in a deposit and see what the mineralization looks like in the walls, and then combine that with what you see in drilling and what you see at the surface, this is the best vectoring you can get, because these guys know what it looks like underground, and they know what it should look like in the drill holes, and they know what it should look like as they're walking around and looking for other ones. But the golden story there is a perfect example. If it's a vertical gold body, a vein, and you're drilling like this, you can be 5 feet from it and miss it. And all of a sudden, all you've got is a copper story. But you go in with those angled holes because the guys saw what it looks like at depth, and boom, you start hitting. And so that team you got is huge when it comes to exploration and finding, and not only expanding on what you know you have, but looking for others. They know what these things look like in that belt.
That's basis of what we're doing. And what was actually even more, so much history is coming just out of the last few years is when we looked at the metallurgy, the historical production sheet, I just said this can't be possible. And through our connections, we actually spoke to Gilbert Clark, who was the metallurgist who actually operated the Cabasal mill. And he says, yes, it's wonderful, it just drops out. So all of this factual evidence reports, I read a report on metallurgy signed Gilbert Clark 1989. And then I ring up the guy and said, is this true? And he goes, yeah. It's a phenomenal, if you take,
database.
Well, yeah, I know. But if you're going to take investors' capital and you're going to take their hard-earned money, their net tax money, and invest it, you don't want to risk it. So what we did with Cabasal is we didn't risk it. It just went, okay, we think this is a very standalone economic for these reasons, the mine, and it has occurred. Now take us to our exploration upside now. St. Helena, again, 10,000 meters of drilling. It was a small operating zinc mine for 18 months. It shut down when zinc hit 60 cents. We know what the metallurgy is, we know what the geology is, and we know that they only sampled the massive sulfide. They didn't assay when they drilled down above and below it, they didn't assay it. So it's a fantastic situation to be able to go to the next resource/exploration upside project, St. Helena, and know where to drill. And say, we're going to drill here and we think it's going to extend there. And this is what we're now doing. So this is our next, what I hope will be our next resource development project. And it's kind of a bit bizarre because in my head, when I look at sort of St. Helena, in every mining company, once you start mining, you've got to do resource replacement because you're exhausting, you're depleting your resource.
Exactly.
Well, for me, St. Helena is like a resource replacement program, yet we haven't started mining. It's interesting. And it's low risk. And this is why we've attracted these, quite significant funds internationally around the world. The last raising, it was 90% international. We're Canadian listed. We took 10% some existing funds in Canada to come in. But 90% of the new money, or the money that came into the raising, was international funds, and some very, very large ones. So we're really attracting long-only funds to finance it, but providing that really exciting upside that retail are looking for from, say, exploration and exploration success. So we're trying to balance both, but in a way that we don't risk money in either.
Well, I got to tell you before we close things off, Gilbert, that when I start getting goosebumps when I hear a story, every one of those has turned into a success and has become a mine. My goosebump indicator is pretty much 100%. And you guys, you're telling this story, and I'm getting goosebumps hearing it, Gilbert.
Well, I come out of managed funds and I don't do risk. It's important to secure my investors' capital and manage their equities. And I think we could almost say that Cabasal is the 30-year overnight success, because when they closed the original mine in 1991, they mined up to the resource statement at the time. So they finished all the selective mining, very small scale, with I think it was a 3-gram gold only cutoff. They did just ignore the copper, but they just ended in mineralization. We just took that initial 700 meters. We've now turned that into over 2 kilometers of mineralization. And we hope to repeat that at St. Helena, take the existential, double it. We've got multiple other prospects to test, but most importantly, the longer term exploration upside, we've got immediate potential growth just adjacent to Cabasal, adjacent to St. Helena, the Alamo target, is that longer term, those ones won't be developed through expensive equity raisings. We hope to be able to do that through net free cash flow of producing near-term copper gold mine.
Well, you've been very generous with your time, Gilbert, and I want to close things off. Did you have any closing comments? You've done a hell of a job explaining the quality of the projects and the opportunity for investors.
Look, fundamentally for our investors and our supporters, we are a very well-managed company. We don't take risks, but we provide certainty and exploration excitement at the same time in a prospect that it'll still be going when I'm long retired.
Let me close it off on that note, Gilbert, and we'll talk at the other end.
Okay, thanks, Allan. I very much appreciate the.
Well, folks, I could talk about this project for many hours because as I described, finding companies in the Lassonde curve that are at the sweet spot of the put it into production wave and also on the exploration side are very rare. And knowing what I know, I spent a good amount of my career in VMS exploration and also in diamond exploration, and they have a lot of similarities because they're all volcanogenic systems. And what both of them have is they're both found in clusters. Where you find one, you often find another. And the fact that they've got Cabacal and also Santa Elena suggests that they have a cluster. And another important factor of those clusters is they come up at the same time, and they're tapping the same volcanogenic system or material underneath the crust. And so a lot of times when you find size and grade and a cluster, they all are quite similar. And finding what they have at Cabacal with the tremendous numbers, the grade, the IRR, the low capex, the fast payback, and that happens because you've got a project that has low costs and high margins, and those are what I call free cash flowing machines. And Cabacal has all the hallmarks of a free cash flow machine. And then all of these other factors of geology of VMS suggest that they're going to find not just one, but multiple. And that makes for a very exciting story. And being able to look at a story like that with a valuation under 100 million is pretty unique as well. So as always, I recommend people to do their homework, speak with their financial advisors. And the big thing about doing that homework, I try to make my shows something that is a launch or a helper for you to start that homework process. Go to their website, check out their news releases, check out their corporate presentations. This is without a doubt a company that you want to understand better and consider as adding to your portfolio. On that note, have a great day and we'll talk to you soon.